Welcome, everyone. My name is Larry Bailey, here to guide you through this week's market news update from information that happened the week of May 19th. I run masteryandcompass.com as a community to make sure that you know everything that's going on. We do these weekly market updates because not everybody has access to this information or this level of insight. So even if you're not in the market game, so to speak, you really should be aware of what's going on because all this news impacts everyone. If you're listening to me on podcast, thanks very much. If you'd like to actually see what's coming up here on screen, head over to masteryandcompass.com, sign in for a free account. Anybody can join and check things out. Here we go. So, as I said, this is a recap of what happened the week of May 19th, 2025. We saw housing showing mixed signals in April with existing home closings disappointing while new home contracts hit a 3-year high. Job and market data also revealed similar contrasts. New unemployment claims remain low, but ongoing claims reached their second highest level since late 2021. Here's the stories we're going to go through. The first one is existing home sales sink to a 7-month low. The next story is new home sales surge past expectations. We're going to see a story on continuing unemployment claims now exceeding 1.9 million. We've got a family hack of the week to talk about. We've got information on what to look for this week. Let's get into this first story. This is existing home sales sinking to a 7-month low. And April's existing home closings disappointed quite a few people. That dropped 0.5% or 0.5% from March to an annual rate of just 4 million units. This is the lowest since September and the weakest April since 2009. That's a long time ago. Despite economists forecasting better numbers based upon March's strong contract signings, with pending home sales at 6.1% month over month from February, closings failed to materialize as expected in April. The culprit? A rising cancellation rate. This was actually a big story last week. I talked about this on socials, but a rising cancellation rate affecting 7% of all sales contracts in April. 7%. Potentially explaining the disconnect between strong contract signings and actual closings. These cancellations may be linked to last month's stock market volatility if people were using stock to buy. By borrowers either losing funds earmarked for purchases or hesitating to sell investments during a market downturn. We don't know. We don't have those exact details. But what we do know is while inventory grew to 1.45 million units, which is up 9% monthly and 20.8% yearly, the current supplies still remain well below pre-pandemic levels, far from the 4 million units available during the housing bubble. This persistent shortage combined with pent-up demand, of course, post continued home price appreciation. So it would be interesting to see those cancellations if the sellers were like, "Phew, thank goodness, I think I can go get some more money." See if that happens. Of course, in just as another personal note, of course, with every cancellation, there's a domino effect. So this whole thing, this 7%, might have been literal. I'm just making this up, but it could have been something much less that just amplified into a total of 7% because if one contract cancels and the people selling that house needed that money to buy the next house, you end up with this domino effect. I think the most I've ever seen personally was 5. There were 5 points of contact in the transaction, and any one of those first 4 could have affected the 5th. That was a wild one. That was a long time ago. So here we go into the next story. We've got new home sales surging past expectations. So almost feeling like it's the opposite of the last story. But new home contracts jumped 10.9% in April, marking the second straight monthly increase. Sales reached 743,000 annual units, a 3-year high that significantly outpaced analyst projections of 692,000. The year-over-year growth hit 3.3%. Despite the median price dropping 2%, median is average. Median is not mode. So the average price, the median price dropped 2% to $407,200 compared to April of 2024. Now, this doesn't signal declining home values nationwide. This is why I brought that up. The median price simply represents the middle point of all homes sold, average, which fluctuates based on which homes are selling. Lower things sell, it brings the average down. More transactions occurred in the South, relatively speaking, where it's generally more affordable than perhaps the North or the West or things like that, compared to April of last year, pulling that median figure down even as prices appreciated across the country. So it's important to note here while inventory stood at 504,000 new homes at the end of April, which was slightly below March's 507,000, only 117,000 were completed and move-in ready. The remaining homes are either under construction or just dirt. The market still needs more available supply to meet housing demand, particularly given the historic shortage of existing homes for sale. This next story is continuing unemployment claims exceeding 1.9 million. So the weekly initial jobless claims dipped slightly by 2,000 to 227,000, staying at historically low levels. However, continuing unemployment claims rose by 36,000 to 1.903 million. This marked their second highest level since November 2021. Bottom line of the story is continuing claims have consistently remained above 1.8 million each week for nearly a year and have surpassed 1.9 million just twice in the past month. This trend indicates that job seekers are spending more and more time between jobs. Companies have either reduced their hiring pace as they have exercised caution amid economic uncertainty, and of course, worries about how this economy could be affected by these tariffs, if they're coming or going or up or down, or who the heck knows what's going on with them. So a lot of uncertainty, hence potentially the reason why hiring is slow. Here's the family hack of the week for this week. If you're planning a summer road trip or a beach day, check out this recipe here on screen. These are homemade granola bars from the Food Network. And of course, like anything else, they're grab and go. So maybe it works out for you. If you're interested in that recipe, go here to the video, see it on screen, check it out, and make it, and let us know how it tastes. Here's what we're going for this week, gang. We are looking at the key housing indicators with some home price appreciation data arriving Tuesday. In April's pending home sales coming in on Thursday. The minutes from the Fed's most recent meeting will also be released on Wednesday, which will probably, most likely, almost certainly affect the markets. Thursday also brings weekly jobless claims numbers and the revised Q1 GDP reading, a figure that investors are also closely watching for after the initial estimates show the economy contracting by 0.3%. We're going to wrap up this week on Friday with delivering the favored measure from the Fed, which is the Personal Consumption Expenditures Index for April. And we're going to see how inflation looks along that. And it's going to be a busy week. So make sure you're ready for it. If you have any questions about anything Encompass, head over to masteringencompass.com. My name's Larry Bailey, and I'll see you around. Take care.